Welcome to Jamali Capital Market Analyst. In today's video, we'll be diving into the world of Forex markets. We'll explore how they work, what factors influence them, and share a basic trading strategy to get you started. Let's jump right in. The Forex market, or foreign exchange market, is the largest and most liquid financial market in the world. It involves the trading of currencies and operates 24 hours a day, 5 days a week. Unlike other financial markets, Forex doesn't have a centralized exchange. Instead, it operates over-the-counter through a global network of banks, brokers, and financial institutions. Forex trading involves buying one currency and selling another simultaneously. These transactions are conducted in currency pairs such as EUR-USD or GBP-JPY. For example, if you believe the euro will strengthen against the US dollar, you would buy the EUR-USD pair. If the euro indeed rises, you can sell the pair at a profit. Factors that affect Forex markets. Several factors influence the Forex markets. Let's take a look at the most significant ones. Economic indicators such as GDP, inflation rates, and employment data can impact currency values. Positive data usually strengthens a currency, while negative data can weaken it. Political events. Political events, including elections, policy changes, and geopolitical tensions, can cause significant fluctuations in currency prices. Market sentiment. Market sentiment, driven by the collective mood and emotions of traders, can also influence Forex markets. Fear and greed often drive short-term price movements. Now that we understand the basics, let's look at a simple trading strategy known as the moving average crossover. First, set up your trading chart with two moving averages, a short-term moving average, e.g. 10 period, and a long-term moving average, e.g. 50 period. Look for points where the short-term moving average crosses above the long-term moving average. This is typically a buy signal indicating potential upward momentum. When you identify a crossover, enter a buy trade. Conversely, if the short-term moving average crosses below the long-term moving average, it's a sell signal. Always set a stop loss to manage your risk and a take profit level to secure your gains. This helps in maintaining a disciplined trading approach. That's a brief overview of the Forex markets, what affects them, and a simple trading strategy to get you started. If you found this video helpful, give it a thumbs up and subscribe to Mehrullah Jamali, Capital Market Analyst, for more trading tips and tutorials. Thanks for watching and happy trading!